can just good morning, good evening, good afternoon, however, or just depend on the time that you open this video. So this is a continuation of this chapter 8 about the audit evaluation and review. So we're just reaching on the point about the comparative. So when you mean for this comparative, we are trying to compare. Just compare means just want to compare two things. So in this auditing, we're just trying to compare the financial statement of the previous year and the current one, whether just are they both applying accounting policies. So you check whether the accounting policies of the period are consistent with the current period. Just briefly speaking on this point, just this is we try to compare the financial statement of previous year and this current year, check whether are both just complying with accounting policies. So for the other information, so not only the information are gathered from the financial statement that are audited by a given audit firm, so also the another informations that not only be based on the financial statement that you have been audited. So according to this international standard accounting 720, state that an auditor should read the other information to identify the material inconsistency. So when you mean this material inconsistency exists when the other information contradicts with the information contained in an audit financial statement. So what you want to mean here for this point about the material inconsistency, this is where the information that you get is contradicting the information that you get from the financial statement that you have audited. So this is where there lies a problem, where you try to make sure that what is the true one and what is the first one. So that is what you call material inconsistency. So subsequent event, this is when an auditor also becoming aware of an event that materially affect the financial statement. So this is what you call the subsequent event. So this is an event that occur up to the date of audit report. So the auditor must become aware of the event that materially affect our financial statement. So this is the fact, that is when you discover a fact but at the date of audit report, but financial statement just before the financial statement are issued. At this time, an auditor does not have the responsibility to perform an audit procedures or to make any inquiry. So this is what you mean where you get a fact just at the date of reporting date, but also before financial statement that audited. Now when you discover a fact after financial statement has been issued, now an auditor also has no obligation to make any further inquiry. So we need to understand this point. So when you get another facts, but after financial statement have been issued at this time, so as an auditor you don't have an obligation to make another inquiry. So any inquiry. So going concern means this is the terms which is most important as we are doing management. For those who are doing the faculty of this economic science and management, so we need to understand this term going concern. Going concern means this is financial stable. This is where the company is financially stable enough to meet with an obligation, so and also continuing their business for the futures. So when their business is financially stable and just means that is able to work for the long. So at this time you can just say that this business is going concern. In few words, this going concern means This is where the business, where institution, the company just is viewed as financially stable and just work for the long. But sometimes there are also indicators that can show us that there is a going concern problem where the organization can just not work for long. So, like especially for a financial one, you need to financially. This is the most indicators, operational, and also there is another one which is compliance. So briefly, when we mean financial problems, this is where an institution or just a given company organization is not able to pay the creditors. At that time, we cannot say that this business is just working for the long. So this is one indicators, like also for this financial, not only where it is an ability to pay creditors, also when there is inability to comply with the terms of the loan agreement, where the company is not even paying the loan that you have been get from the bank. So the second point, which is second indicators of this going concern problem for a given entity, is operating. So when we mean operating, this is operation of the company. So when the company or institution is having a problem of daily activities or the money to pay for daily activities of a given institution, or for example when there is a loss of key management and staff without replacement, this is the most problem and the most indicators that show that the business having the operational problems. So the other one, but also there is non-compliance with the rural regulation, where the company failed to comply with rural regulations. Also, it can be the indicators that show you that the companies that not work for the long. Also, when the company, given an entity, for example, business oriented, when they see that there is a decrease of sales revenue, when there is a loss of key management, there is a cash flow problems, where the company not able even to pay the expenses like salary and wages to make advertisement and the other things. Also, even not able for gaining to create activity that can make it gain some money. At that time, you can say this is very indicators of going concern problem. Now, this point, the last one, as I said before, so compliance with the national financial reporting standard. So also as an auditor, as future auditors, so we also need to compare or to check whether the financial statement of a given entities, is prepared in a way of complying international financial reporting standard. Also check whether I can just comply with the national standard. So because sometimes when you are doing as an auditor, you are just giving the audit report. You cannot just offer the report where the financial statement of a given entity, with the both standards. So you choose the one. We're going to see it before. Under this point. So, but here the company report on financial statement compliance with international standard and their own national accounting framework. So you check whether the financial statement of a given entities is complying, or the report is that a given financial statement as prepared by comparing with the international standard and also their own national accounting framework or standard. Now, just I don't want to talk more about this. It is understandable. What you need is that you need to try to compare